How's it going, fellow traders? This is Magic Trader here, and this is the CFTC report for March 27, 2018. Right now it is currently Saturday the 31st, around 6:30 p.m. And I am going to break down the latest report and take a look at the positions of the institutions and see what they are up to. Alright, so let's start off by looking at gold. So what do we see with gold here? So, gold's been an interesting one because back in January, they were extremely aggressive with their long positions, and then we saw them taking profits on those long positions, right? They were 77% exposed to the long side. And you know, over the last few weeks throughout February and most of March, we saw them taking profits on those long positions. But just this last just the previous week right here, so this is starting here on Tuesday up until Monday, so a little bit of this candle here. So, but the majority of this report's data represents this candle here, the second last candle right here. So now we see a big increase in longs. So we're going to go through all the other pairs, and you're going to see something interesting here. On the euro, on the pound, on gold, what the institutions did was they bought a heck of a lot of gold to push price up right into areas where they wanted to close the positions. Now, I was mentioning this on my last video, saying that we got to be careful. A lot of traders are going to be sucked into going long here, and they're going to be stuck with long positions. And I think that's exactly what they just did with gold by suckering, is it even a word? I don't even know. By sucking people into long positions only for them to reverse price and drop it down like that. So here we have that increase in longs from 223,000 to 259,000, and at the same time they dropped off their short positions from 75,000 to 55. So in the meantime, what ends up happening is long exposure rallies from 75% to 82%, and we get net positions jumping up quite significantly from 148,000 to 203,000. So that's pretty significant. Right now the sentiment is bullish because we got such a big increase in exposure. We have to pay attention to that. Okay, so what happened was a weekly bullish engulf was created right at that weekly 20 EMA. So one of two things can happen. Price can just sit here until a move is about to be made, or if that weekly bullish engulf gets taken out, then there is a very high probability that we get a drop all the way down here to that weekly demand zone, which is where I've been expecting price and wanting price to drop to, so I can open up a long position right down here. So is it going to happen? It's hard to say because the price action on here has just been very range bound, but I do think that there's a very good chance that it does happen, because with the US dollar rally that I'm expecting and the euro drop that I'm expecting, it's going to force this one down here. That's my thinking, and that's what I'm expecting is going to happen. Okay, so let's take a look at oil. What do we see here with oil? We see that oil increases. They increased their long from 823,000 to 854,000. And at the same time they increase shorts from 119,000 to 138,000. So that's kind of interesting. Now, we did expect longs to increase because we saw this big move to the upside. As you know, I already have a institutional long signal present on the daily chart, so I've placed a trade. I placed my orders on the charts ready to take a long position, because looking at market dynamics and understanding that this area of weekly supply was caused by institutions taking profits on long positions as opposed to them filling in supply. So when price gets back up here, it's most likely not going to be used to fill in short trades to get price to drop. Now, the only thing I don't like here is that the long exposure is very high up there, and taking longs while the long exposure is already so high up is risky. But, you know, looking at market dynamics, what I'm seeing is that the institutions are interested in taking oil long. All right? And we could just very much get a monthly bullish engulfing here. I think that is actually a monthly bullish engulf. We got the move to the downside. Yeah, we closed this month up there. Yeah, so we got that monthly bullish engulf. So that is a good sign that we get a bigger move to the upside. How is that going to happen? How much higher is this going to go up? Is it going to go into the 90s? You know, that's a possibility. But I have orders to go in long because there's no doubt here that the institutions have a long bias. And, like I said, the charts are displaying signs that the institutions are more focused on maintaining demand zones than they are removing the demand zones. So those are all indications to me that they want to take price higher. Again, it's a bit risky because I would prefer not to go long with the institutions at, you know, high 80s exposure. But I'm going with market dynamics, so I got my trade to get in long about this area here. Okay, so let's take a look at the next one. We have US dollar. What do we see with the US dollar? So we see that longs increase, right? And that comes with this drop right here. So price drops, they increase longs, and they also increase shorts. So the increase in shorts was used to drop price, and then they were adding in longs to get this move to the upside that we just saw. All right. Long exposure drops 2 points, but that's no big deal because they were using shorts to drop price down. I suspect on the next week's report we're going to see those shorts being closed off, and we're going to see longs being added a little bit more for a push up. So still expecting that push up. We've got that trend line here that might cause a little bit of a disturbance before price gets all the way up here, but I am still waiting for that move to the upside. Aussie US dollar, what do we see? We see that longs drop by about 2,000 positions from 53 to 51. But take a look at this big increase in shorts, 35,000 to 42,000, right as the candle here was consolidating. So they slightly reduce longs, and then boom, they pound in some shorts, which causes price to start to decline. Now again, I have orders here to go in long, so this increase in shorts does not scare me because they would need to increase shorts to get price down here, and then an eventual move to the upside is what I'm expecting. Now I want to point out something that I've noticed before, and I want to really learn from this scenario here, because if you take a look at the coloration of the cells here, they are a lot different than what was happening here. What happened on December 19th's report? Why such a big drop from 93,000 long positions to 38,000 long positions? So why this happens, why we see switches like this, big changes in position sizes, is because that data represents futures contracts, and as we know, futures contracts have expiries. So when a contract expires, you need to get out of those positions on that contract and then open up the positions on the next contract. So that happened here. So what happens is they need to get out of 93,000 positions on one contract and then open up those positions on a next contract. But when one contract closes and you close those positions, they don't necessarily have to open the exact same amount of contracts on the next, or sorry, the exact same amount of positions on the next contract. They don't. And we've seen that happen with other pairs. We've seen that typically they do. So if they have 93,000 positions or contracts on one on one 93,000 positions on one contract, and that contract comes to an end, they don't have to necessarily do that for the next one, All right? They don't necessarily have to do that. Open up the exact same amount. And so they didn't here on the Aussie. They opened up only 38,000. So it got me thinking. I'm like, why would they go from 93,000 to 38,000? What would happen for them to want to do that? What would cause them to want them to do that? So we have a similar situation now happening on, I believe, the Kiwi and the Yen. And so I have a very good indication as to why they're doing this. But so I'm going to be watching the other charts because I want to pay attention to see if what I'm thinking is happening is actually happening. Because if you take a look here, okay, they were at 93,000. The contract ended. The new contract began. And they opened up 33,000 positions. Okay? 33,000. And 30, 45, 52, 63, aggressive. A little bit less aggressive. And then back up to the 50s. But bottom line is from 38 to 50s, they have been increasing. More so a few weeks back. And this area here, and starting to increase again over the last couple weeks. 33, 53, 51, 38, 53, 51, as prices slowly dropping. So I think what is going on here is they wanted to push price down here. December. So you're looking at around here. So that would make sense. Take a look at this. So if they were 93,000 contracts here, and then they have to close them and open up, do they want to open up 93,000 contracts here? Or do they want 38 if they expect price to eventually drop before going in long again? Wouldn't they want to start adding in long positions down here, or as opposed to being with 90,000 contracts here? Wouldn't they rather get that 90,000 maybe here, here, here? Right? So that's what I'm thinking is going on with these big moves like this. And so we'll get to the other ones and I'll show you exactly what's happening there too. All right, so let's take a look at USCAD. What do we see here? So we got that move to the upside, just fell short of this area where I wanted to go long. We're just falling short of the descending trend line on the monthly chart. We also fell short of hitting that weekly supply, which is where I thought price was going to actually hit, but the US dollar weakness came into play, which made this fall short, and we see this drop now. All right, so now we're stuck like within this wedge formation. So we're stuck between a higher time frame area of demand and a higher time frame trend line. So taking trades right now would not be a good idea. We have to wait for things to play out before we can actually make a move here. So I'm expecting this, and then a break up to the upside. Once it breaks up to the upside, whatever zone breaks this trend line, this is a magical trend line. All right, folks? And the banks know that everybody's watching this trend line. That's another thing that's keeping price, you know, that pressure from the downside here is retail traders, because they got the trend line there. So when price does eventually get up here and then the breakthrough happens, whatever zone causes that breakthrough of this trend line is going to be one magical zone. Okay, and we're going to take a look at that. When that eventually does play out, we're going to take a look at exactly that zone that causes the breakout. And I bet you anything, the institutions are going to use that zone to shoot price up to the upside. Okay, but we'll wait until then. Right now, over the last 2 weeks, they've been increasing longs 54,000 to 60,000, and then a massive drop in short positions, 78,000 to 33,000. Now, didn't I tell you when price was down here that they're going to push price all the way up? I said that that was going to happen. I said that eventually this is going to go even higher. Is this not a very good sign to support that right now? That's a beautiful sign to support that, right? 64% exposure to the long side. Used to be short. Everybody wanted to short this. Everybody thought it was going to continue dropping like this, and it didn't. That didn't happen. Now we're going to the upside. So very good support here for the move that I'm expecting is going to happen to the upside on the US CAD. So let's go to US Swiss franc. What do we see? We see that longs are still around 25,000, shorts slightly decline, which is good, because I was also saying that even though this weekly area of supply was going to, where we were going to get a reaction to the downside, which happened, that we were also going to get a break to the upside. And there was a really nice trade that played out on the 4-hour chart, a demand zone that I was mentioning on the last video, that was most likely going to be used by the institutions to propel price to the upside, and that's exactly the zone that was used to push price to the upside, because I do expect that this area is going to be taken out, and if that is going to happen, longs need to stay aggressive and shorts need to drop, and we see the first sign of that. So long exposure 61%, which is decent. It's not as green as this, so it's somewhat neutral bullish. All right, net positions up positive 9.4 thousand, which is good. I don't think we should be taking any trades right now, because at the end of the day, weekly supply is in control. And then right above that is going to be this trend line, which may cause a move to the downside. But I do believe we're going to get a further push to the upside. Just not taking any trades right now on that pair. Euro US dollar, what do we see? We see that longs increase from 214,000 to 234, and shorts also increase. Now, just like I was pointing out on gold, we had an increase in longs to push price up, and that's exactly what happened here. Okay, take a look at the candle, green candle. They added longs to push price up, sucker in a bunch of longs, and at the same time they were adding shorts, because they knew eventually price was just gonna come right back down. So they wanted to hedge. When you add longs and you also add shorts, you're hedging on that position so that the drawdown isn't as strong, but at the same time you're causing a move to the upside, which is going to be used to trick people into thinking that price is going to continue higher. So long exposure drops by a point, but that's not such a big deal. Net positions increases, but we'd understand why that's happening is because of the increase in longs. Further move to the downside is what I'm expecting. We got this trend line just like on the US dollar, so we're going to get a little bit of a speed bump here, but eventually we're going to get a push to the downside. Next, we got the pound US dollar. Again, we get that push up in long positions from 71,000 to 90,000, and we also get the push higher with short positions from 47,000 to 56,000. It's pretty much the same thing going on here. All right, push price in, lure people into buy, and then boom. I believe next report we'll see that these long positions drop again from 90 to whatever, 85. So they'll be taking profits on those long positions. Again, still waiting for this move further down on this pair. Alright, US dollar, Japanese yen. So here's that big shift that I was telling you about. Okay, so we got the contract expiring right here. They had 123,000 contracts, and they closed all of them, and they only opened up 69. Okay, only opened up 69,000. So 69,000 is, you know, pretty much almost half of what they had. March 13, so that would take us that one. So right here. So this area here, they were positioned so many longs, and now price drops. The next candle right here. This candle, so already this candle here, that move up, they closed all those long positions and they opened up only about half of those long positions. So what could be in play right now? Shorts are aggressive, causing that drop to the downside, which is expected, and overall exposure to the long side only 52% right now. I believe they're going to start accumulating that long position again. So I think another thing here is, here's another theory that could be in play. You close off 123,000 and you want to open and into the new contract, but you don't want to move the markets too aggressively. So what do? You only open up half positions? Yeah, that's probably what's in play. They don't want to disturb the market too much and show too much of what they're up to. So now they're going to start to slowly build. I think that's a very good possibility too. At the end of the day, I do believe that they're going to start accumulating a position now to the long side. I just price fell short of hitting my long order. I had a long order at 104.64, and I think it came within 1 or 2 pips, and then we got that strong reaction to the upside. Weekly bullish engulfing. Banks are coming in and buying. Okay, they're coming in to buy. So accumulation here, and then we're going to get a move to the upside is what I'm expecting. So right now I'm waiting for a nice trade signal to present itself for me to get into a long position. Kiwi, same thing here. Take a look, but this one's to the downside. So it's funny. With the Aussie, we were expecting price to go higher for the long term, and so long positions were changed to a high degree. And with the US dollar, Japanese yen, we're expecting a move to the upside longer term, and longs again are the one that's changed, right? Those positions have changed very aggressively. And so, you know, even though this chart's very messy, I've been saying that there's probably a better chance of price dropping from here than going higher. And take a look. It's the shorts that are now different. They used to be aggressive, 37,000 positions, and now it dropped to 11,000 and then 14,000. So something is in play here. They could be starting to accumulate short positions now, and then eventually push price to the downside. That seems to be what is most likely happening with these big changes in positions. So we'll wait and see. We'll wait and see. But I'm definitely going to learn and realize something big from this situation. I'm going to watch it, take some notes in my journal, and see if there is a common theme playing out with all these charts. And then in the future we can use this information to better gauge what the institutions are up to. Alright guys, that's the CFTC report for this weekend. I hope you guys are enjoying your Easter, and until next time, have yourself a good weekend.